All right, traders, fellow Apex traders specifically, today has been quite a bit of a cluster F, and I don't really know any other way to put it, but we do kind of have two things said by Apex Mods as well as Daryl himself, which is the owner of Apex, coming through and kind of answering the questions about these rule changes. And if you're here watching this, it's because you are wondering what the heck is going on. So pretty much, I'm going to read exactly what Michael from Apex had said. He's one of the admins there, and here it is. Apex has been very lenient with past rules and payouts for PA accounts only. Since people have been taking advantages of past rules, we have updated the guidelines to easily follow and understand clearly. Most people upset about the 1 to 3 don't realize that you need about 80% win rate to just break even, which is true. Your trade strat can be anywhere above that. We are not forcing a 3 to 1. That is just the maximum risk reward allowed. We also are not saying you cannot manage any trades without a take profit / stop loss. If the trade goes south, manage it if structure changes, or if you have a runner that is called trade management. That is still the name of the game. The enforcement of these rules are to combat people with no clear strategy who may end up with 5K on the day, then down 7K, and at the end of the day, 10K up by going without a stop loss or a really far out take profit. This rule won't affect 98% of traders who trade legitly by using a prop firm for what it's made for. Example of a 1 to 3 is you're risking $150 to make 50. So my thoughts on this real quick are, it's going to be interesting because a lot of traders don't necessarily put a stop loss in when they get into a trade. They just see a spot on the chart that they're willing to stop out at. And so the fact that they're going to have to put that in, to my knowledge, not always before you get into the trade, but once you get into the trade, you have to put a stop loss in. Now, how they're going to manage if that ends up being a 1 to 3, I don't know. I don't know exactly if they're going to be hard coding that rule or what, but if you put a stop in and it's 200 ticks away and you end up taking profit for only 20 ticks, that's a 1 to 10 ratio. So are they going to say that's not a good trade? I don't know. It's a very gray area, but to my knowledge, the way that they have written it in the agreement itself, that if you go into the payment agreement, if you go to request payout and you click on the link that says I have agreed to the payment agreement, etc., in there, it says that you have to have a hard stop in there and it can't be more than 1 to 3. So is this going to be a way for them to deny payouts? I don't know. I really don't. It is now, to me, an even grayer area than it was before. The other part that was brought up was the dollar cost averaging. So the dollar cost averaging is if you get into a position and it goes against you and you were to add to that position, say you started with one contract, it goes against you, you add another contract, that would give you an average between those two contracts. They don't want you to do that because essentially people are averaging down until the trade works, which is a legitimate strategy that people use in stocks. Some of the most profitable traders I know do exactly this dollar cost averaging, but apparently they don't want you to do that on the prop firms because apparently that is not a consistent strategy to them. I don't agree with this. I believe dollar cost averaging is part of a system. If you do it correctly, you can have risk management with dollar cost averaging. There's no difference in putting in a stop after you've dollar cost averaged after a certain point. Like say you have a 1-1-2 structure where you start with one contract, you add another one, and then you add two more. And then after you add that second one, you have a defined set amount in your head that you are not willing to lose. That's no different than just putting a stop at the very beginning of the trade when you first get in, right? It's just a different way of getting there. Instead of just entering 4 contracts altogether, you're entering 1, 1, and 2 to get to 4 with that same stop loss amount in your head to use. So I don't quite understand the dollar cost averaging aspect of it. I think between that and this whole new stop loss ordeal, it's going to really cause a lot of confusion. It's going to cause a lot of chaos on the Apex front. And I don't know what it's going to do, but I don't know. I just today, I heard a lot of people asking about a lot of other different prop firms because this is not sitting well with them. And everyone's starting to wonder that if they're even going to get payouts if they request them because of these new rules. Like, are they going to use those gray areas to deny payouts, or are they going to use these gray areas to still give payouts in situations where they should be given? Like if you're a consistent trader and you forget to put a stop loss in, but you make a trade that you've been making every other time, like, are they going to put that? Are they going to hold that against you? I mean, I don't know. I don't like there being this much gray area, because then it essentially leaves everything up to their discretion and how they want to interpret something. And I don't know. It isn't sitting very well with me, but as we always do, we're just going to find a way to adapt and move forward. So if you have any questions, feel free to ask them down in the comment section below. You can find me in Discord. This is obviously an ongoing thing, but that is the gist of it. Those two big things, the dollar cost averaging and the 1-to-3 stop loss to take profit ratio. But other than that, I will see you guys in the next one. Peace.